Hey everyone, and welcome to FinTech. I wanted to make this video just prior to Zoom's next quarter earnings release, but the massive drop in share price triggered by what many are hailing as the end of the pandemic made me think that this video might be a little bit more topical right now. In this video, I will review the background on Zoom as a company, why the stock has risen over 300% since March, and what the news of a potential vaccine could mean for the future of the stock. And stick around until the very end of the video to see what trades I have made based on the news that there may be a vaccine available soon. I don't want to do too much intro, so like and subscribe if you want to, and let's dive into how Zoom grew into a $100 billion company. Zoom was founded in 2011 by a former vice president at Cisco WebEx, Eric Yuan. He left Cisco in 2011 along with 40 engineers to found a new company which would later become Zoom. Interestingly enough, Zoom actually had trouble attracting investors early on because a lot of them thought that the video conferencing market was already saturated. But after a year of finding investors and building their product, Zoom launched to the public. Once they hit the market, Zoom took off, signing on 500,000 users in their first 5 months. 4 months later, they were at 1 million users. This rapid growth would characterize Zoom's future. Zoom's growth was propelled by a combination of ease of use and the quality of the tool they provided. While a lot of video conferencing tools, even as late as 2020, still feel really clunky, Zoom always just kind of worked. In 2019, Zoom finally went public in an IPO and their shares immediately surged 72%, bringing them up to a valuation of $16 billion. I watched this IPO and like a lot of investors, I was intrigued. I liked Eric Yuan and I really bought into his vision for video conferencing as the future. But the price was just a little bit too rich for me at that point. Zoom's stock price remained relatively flat for the rest of 2019, while they worked to build up their revenues to match their high valuation. And they grew revenue around 88% over that fiscal year. Then in March 2020, everything changed for Zoom. For anyone who hasn't been following Zoom closely, they have experienced truly once-in-a-lifetime growth over the past year. Driven by both an increase in the demand for video conferencing in general, coupled with people's desire to still interact socially and face-to-face without being in the same room, Zoom caught the perfect wave of the cultural zeitgeist to become the go-to tool during the pandemic. You want to catch up with friends? Zoom call. You want to talk to grandma? Zoom call. You want to collaborate with people at work or maybe at school? Zoom call. Right at the end of March, it seemed like everybody got on Zoom at the same time, and its stock price rapidly doubled in expectation that some of these customers would become paying customers as the pandemic went on. But even after doubling in price, Zoom still felt like a bargain to me, which is why I bought in around this point. Now, Zoom's rise in stock price wasn't without some ups and downs. Back in April, there were some privacy concerns over different users Zoom bombing each other, where users would join someone else's Zoom meeting and basically crash that meeting. But Zoom's leadership acted extremely quickly to dispel those privacy fears, buying a security company and basically wiping out all talk of privacy concerns within a matter of months. If you look at Zoom's stock price over time, you can kind of see the privacy concerns taking a small hit to the stock back in April and then disappearing after that. At the time, a lot of people sold out of the stock because they thought this was the end of Zoom, and I think this is a really good lesson on weeding out potential long-term problems versus short-term problems that can be easily addressed by leadership, of which the privacy issue is clearly just an example of a short-term problem. Zoom's stock price continued to rise up to around $240 a share, where it kind of stalled in anticipation of Zoom's Q3 earnings release. There seemed to be a question of whether Zoom would report a blowout quarter and its stock price would rapidly rise, or if it would fail to meet the high expectations of growth that people had for it, and a lot of the customers that they were signing up wouldn't actually pay for the platform. Well, luckily it was the former, with Zoom reporting one of the best quarters I have ever seen for any company. Zoom grew its revenue 112% sequentially, with its quarterly revenue reaching $663.5 million and it increasing year over year 355%. This means in one quarter, Zoom grew their revenue from $328 million to $663 million. And it's important to note that 19% of that growth came from existing customers, showing that Zoom had the ability, once it already had customers, to sell them to actually spend more on the platform. So what's happened since then? Well, after reporting the greatest Q2 earnings that I've ever seen, Zoom's stock price doubled once again, peaking at almost $560 per share. It has since dropped to around $390 per share, a drop of around 30%, which brings it back in line to around where it was back in September, just a few days after reporting their Q2 earnings. So what caused this massive drop in the stock price? Well, there hasn't really been any company-specific news, so the only conclusion I can come up with is that macro concerns around a vaccine coming out and potentially ending the work from home environment that we've been in could drop the number of customers that Zoom has. This is corroborated by drops in some other stocks that are categorized as work from home stocks, including CrowdStrike, which have benefited from the number of people working from home and the general shift that companies have made to support remote working through cloud computing. Now let's be clear. Zoom has absolutely benefited from the number of people working from home, with a lot of companies forced to develop remote working strategies which incorporate video conferencing. But is a 30% drop in the value of the company warranted by people no longer working from home at mass scale? Is Zoom really just a work from home stock? I think it's important to break Zoom out into two separate markets. The first is people who use Zoom socially for hosting Zoom parties, and the second is workforces, either in schools or in companies, who pay for Zoom so that their workers can collaborate remotely. I do think this first category is going to take a hit. Not everybody who's currently paying for a Zoom subscription is going to keep doing so once they can see people in person. But that's not to say that it's going to go away entirely, because there's still a lot of people who have realized that Zoom is the best platform to use for talking to people who live far away, maybe relatives who live across the country. But what about companies and workforces? Well, if we look at Zoom's results from last quarter, we can see that customers who paid over $100,000 a year grew 112% year over year. Zoom reported they had 370,200 customers with over 10 employees, which was an increase of 458% year over year. While you might think that a lot of Zoom's growth has just come from users using it socially, the fact that Zoom has become so embedded in the cultural zeitgeist has actually translated to a lot of companies using Zoom and signing on to subscriptions. I do not think this group will be nearly as likely to unsubscribe once work from home ends, because they're going to want to maintain those remote working strategies just in case something comes up. This is especially true now that we've seen that working from home has huge benefits both in terms of flexibility and productivity. Are you snowed in at home? You can use Zoom. Are you sick with a mild cold and you don't want to expose others? You can use Zoom. I think the same will apply to schools. It's unfortunate, but we may never have a snow day again, because if anybody has ever snowed in, they can just use Zoom to complete their classroom work remotely. So even if work from home ends tomorrow, is Zoom really worth 30% less than it was a couple weeks ago? I highly doubt they will lose 30% of their customers, and we have already seen that once customers sign on to Zoom, they tend to spend more money on the platform, not less, with the average customer spending 19% more on Zoom quarter over quarter. We also can't forget that Zoom was growing rapidly before work from home ever happened, growing revenue 88% in 2019 and 160% in Q1 of 2020. All work from home did was propel Zoom into the forefront of everyone's minds, making them the de facto brand for video conferencing the same way Coca-Cola is for soda or Kleenex is for tissues. So what am I doing now that the stock has dropped? Well, first off, let me give a disclaimer. I'm not giving investment advice. I'm just going to tell you exactly what I did, and you can make your own decisions. If you watched my October stock portfolio review, you'll know that Zoom was already by far my largest position, and so it made me a little bit hesitant to buy more, but I couldn't resist adding an additional $2,000 to my position after the stock price dropped 30% on November 10th. I won't be buying any more of the stock at this point just because I don't want that position to get too large, but if I had the option, I probably would buy some more. Now, I'm not saying that when Zoom reports its Q3 revenue, that's going to be a huge blowout quarter like the last one. That would be basically impossible for even a company like Zoom to replicate. What I am saying is that I'm investing in Zoom as a long-term position, which I absolutely think has the potential to grow and even double in price once again. Despite having plenty of really high-performing stock positions, I still think Zoom is the most likely to perform in the future. Hence why it's my largest position. And let me know in the comments what you're going to be doing with your Zoom stock. Are you going to be selling, or are you going to be buying more? With that said, I hope you enjoyed this video. If you did, make sure to leave a like. And if you don't want to miss out on any future videos, make sure to both subscribe and hit the notification bell. I'll see you next time.